Hey there, my name's Curtis Lucas and you're watching Empire Building. So in this video, the biggest news of the day, at least in the Bitcoin mining world, is obviously the announcement that Core Scientific, the largest publicly traded Bitcoin miner by hash rate today, might be going bankrupt. In this video, my goal is to answer the most important of questions. 1, how did this happen? 2, what is the company going to be doing about it? 3, what does that mean for the current holders of the common shares? And maybe the most important question, is the stock actually a buy now? To start, I found it interesting that despite this brutal news and performance of the stock today, they still went ahead and published their committed daily results for Bitcoin mined over the last 24-hour period, which has been in line with actually slightly higher than it typically is, at 40 Bitcoin per day. 40.3 Bitcoin over the last 24 hours. Now, it's worth noting that there's only 900 Bitcoin that can be mined in total every single day. So they're actually getting almost 4.5% of all the Bitcoin that can be mined on the network each and every single day. So yeah, this is a massive player. They possess an enormous amount of hash rate on the Bitcoin network. But clearly, not all is well in the empire. So let's have a closer look. There was a lot of articles published today, and to be honest, I chose not to focus too much on that. I prefer to go directly to the source, which was in the SEC filing that they submitted or published last night. And in here, we can see what everybody has been responding to. As previously disclosed, the company's operating performance and liquidity have been severely impacted by the prolonged decrease in the price of Bitcoin, the increase in electricity costs, the increase in global Bitcoin network hash rate, and the litigation with Celsius Networks and its affiliates. As a result, the company has been actively taking steps to decrease monthly costs, delay construction expenses, reduce and delay capital expenditures, and increase hosting revenue. In addition, the board has decided that the company will not make payments coming due in late October and early November 2022 with respect to several of its Bitcoin and other finances, including its 2 bridge promissory notes. As a result, the creditors under these debt facilities may exercise remedies following any applicable grace periods, including electing to accelerate the principal amount of such debt, suing the company for non-payment, or taking action with respect to collateral where applicable. Any such creditor actions may result in events of default under the company's other indebtedness agreements, including its 2 series of convertible notes due 2025 and the potential exercise of remedies by creditors under such agreements. Yeah, this is not good. There's no way to spin this in a positive light. This is a really, really tough situation for a company to be in. So as far as how they got here, clearly this is a combination of them not being able to service their debts using the revenue that they generate from their substantial Bitcoin hash rate. But after paying those increased electricity costs, there's just not enough money left to go around. This company was or did carry a significant amount of debt before it went public, but of course that was when Bitcoin prices were significantly higher, so the amount of assets that it had on its balance sheet in the form of Bitcoin made it look a whole lot better than it actually was, considering the sequences of events that would play out. Clearly they were not in a very strong position when it comes to their power agreements, and they were subject to significant price increases in that respect as well. Full disclosure, I actually did purchase a fairly significant number of shares of Core Scientific just a few days ago when it dipped down below $1 a share. At the time, to me, it did appear like it might be a buying opportunity, so I scooped some up. At the end of this video, I'll let you know what I'm planning on doing, whether I'm choosing to hold those shares, sell them, or perhaps even buy more. But for now, let's carry on. In light of the foregoing, the company is in the process of exploring a number of potential strategic alternatives with respect to the company's capital structure, including hiring strategic advisors, raising additional capital, or restructuring its existing capital structure. Specifically, the company has engaged these lawyers and these financial advisors to assist the company in analyzing and evaluating potential strategic alternatives and initiatives to improve liquidity. The company and its advisors have begun to engage in discussions with certain of its creditors regarding these initiatives. The company expects these activities will continue and intensify. Among possible alternatives, the company may explore liability management transactions, including exchanging its existing debt for equity or additional debt, which transactions may be dilutive to holders of the company's common stock. These discussions may not result in any agreement on commercially acceptable terms or at all. Furthermore, the company may seek alternative sources of equity or debt financing, delay capital expenditures, or evaluate potential asset sales, and potentially could seek relief under the applicable bankruptcy or insolvency laws. In the event of a bankruptcy proceeding or insolvency or restructuring of our capital structure, holders of the company's common stock could suffer a total loss of their investment. So yeah, if that doesn't tell you this is definitely about to get real, I really don't know what else to say. They also go on to disclose that they had already in place an at-the-market offering of $100 million worth of shares of the company's common stock, and as of October 26th, they had sold 13.3 million of those common stocks, and with the proceeds of approximately 20.7 million. So they still got another $80 million worth that could be raised through that. But it's also worth noting that in order to raise that $79 million worth of proceeds, they would need to sell 395 million shares of the company's common stock. That is not possible. And even at that, the rate that they are burning through cash, that would only provide them with approximately a 4-month buffer. So yeah, this is not a realistic approach on their part. They go on in here to say that it is very difficult to estimate our future liquidity requirements. The company anticipates that the existing cash resources will be depleted by the end of 2022 or sooner. Depending on the company's assumptions regarding the timing and ability to achieve more normalized levels of operating revenue, the estimates of amounts of required liquidity may vary significantly. Similarly, it is very difficult to predict when or if Bitcoin prices will recover or energy costs will abate. Given the uncertainty regarding the company's financial condition, substantial doubt exists about the company's ability to continue as a going concern for a reasonable period of time. So yeah, this is looking very grim. So let's talk about what their plans are. They outlined a number of options there. So let's evaluate those options and what impact that might have on shareholders. One thing they said was whether or not they could take on yet even more debt, which I think has become abundantly clear, especially under these conditions at rates the way that they are. That isn't going to make their problems any better. Another thing they can do is sell off some of their assets. This has been done by other companies such as Argo Blockchain recently sold off a substantial amount of their Bitcoin and even some of their miners in order to restructure their debts and make them slightly more competitive and reduce their those burdens that they have. So it's worthwhile having a look at Core Scientific's balance sheet, which is also available through the SEC in their last quarterly earnings from the second quarter, June 30th. And in here, we can see at that time they had $128 million worth of cash and cash equivalents. And you can also see that under their long-term assets, they had over $1 billion worth of property, plant, and equipment. That's net. So that would include the value of their miners in there as well. There's $266 million here under what they're calling goodwill. And total assets in here at $1.8 billion. So yeah, they've got a lot of assets under the company's umbrella. But under liabilities, here you see, yeah, a lot of liabilities as well. But still, all the same, currently, if you subtract all of the assets from all of the liabilities, what you end up with here is the total stockholder equity at $416 million. So this is where things get a little bit interesting, because that suggests that if you were to liquidate the entire company and pay off all of its debts, there would still be $416 million remaining. As of right now, the current market cap of the company sits only at $78 or $79 million based on its current share price. So that's a significant discount based on the last reported shareholder equity. But we must be very careful of this, because this is based on stated asset value, and it's not necessarily representative as to what one would actually retain in the event that all these assets actually had to be sold off. It's one thing to say your house is appraised at this value. It's another thing entirely to actually sell it at that value. And further to this point, we can see down in the revenue section that one of the losses that they suffered from that last period was the impairment of goodwill and other intangibles. That's $790 million of impairments. It's not clear what those were, but this is why I go back to in this section up here where they mention under their assets goodwill at $266 million. Well, those were obviously written down in the previous quarter, or in this current quarter that's shown here. So what might we see when the next quarter, Q3, gets published? Which brings this, that would bring the state of things at least up until the end of September. We won't know that for a couple more weeks before that report gets published, assuming it gets published on time. So yes, as I said, there are a lot more questions here. You have to be very, very careful and not just take everything that you see here at face value. But it does stand to reason that there is at least a means to satisfy their debts, but that would essentially require gutting this company. They've got an awful lot of mining equipment, so a large portion of this might actually be miners, in which case it's actually quite easy to offload those to other interested parties. They could even stay exactly where they are. So that's also a possibility here. There's a lot of questions that we might have, but we're just not going to be able to get enough information to determine exactly how this is necessarily going to play out. And therein lies the risk. But there are possibilities. Now, there's one more thing I do need to make sure is made abundantly clear, because the other thing that they seem to be leaning into quite heavily in here is whether or not they will restructure their debts. What they refer to restructuring its existing capital structure. What they're basically talking about there is a Chapter 11 bankruptcy. So the thing that you need to be clear on is that might actually be the best option for the company, but it's not necessarily the best option for the holders of its common shares, because your rights as a holder of common shares are not the same as, say, those that are insiders to the company. There's different classes of shares, and common shareholders are often, let's face it, left out to dry. From Investopedia, this is where you can find out more about what happens to the stock of a company that goes bankrupt. When a publicly listed company ceases operation and goes into liquidation, the company's shareholders may be entitled to a portion of the assets, depending on the type of shares they hold. However, the stock itself is usually worthless. The owners of common stock shares are the last in line for a share of the firm's liquidated assets. So the hope is a faint one. If a company declares Chapter 11 bankruptcy, it's asking for a chance to reorganize and recover. If the company survives, your shares may too, or the company may cancel existing shares, making yours worthless. This is what I mean by that's actually in their best interest. It is entirely not in your best interest. So this is the biggest risk facing this company right now if you're a holder of the common shares, which is the case if you bought them on the open market. Even if they restructure the debts and the company pulls out of bankruptcy and survives, you will still take a total loss on your investment. If it is a Chapter 11 bankruptcy, common stock shares will become practically worthless and stop paying dividends. Not like these pay dividends anyways, but the stock may be delisted on the major stock exchanges, and a Q may be added to the stock symbol to indicate that the company has filed for bankruptcy. So this is the most important thing to realize, and this is what I think is going to take place before this is all over. The company itself may yet survive, but the holders of its common shares are most likely doomed. So if that doesn't already make it abundantly clear what my intentions are, based on, and unfortunately it took me all day to finally sit down and actually understand the true implications here, and I'm sharing this with all of you. Luckily, this is my smallest position that I hold, so it's not going to doesn't have a significant impact. It basically wipes out the gains I've made over the last week and a little bit more. But I guess these are the lessons we learn. This is going to be a valuable case study in the inner workings of these markets and how these debt restructuring events actually play out. But do not get fooled into mistaking cheap for value. It is awfully tempting to look at this and think, this being the largest Bitcoin miner on the stock market, the largest publicly traded Bitcoin miner, currently valued at less than $100 million. Even in terms of its equity, all of its assets minus all of its liabilities, still put it at 4 times that value. That doesn't make it a good deal if you're only buying the common shares. But I do also want to make it abundantly clear that that doesn't mean that we don't necessarily see a massive reversal or a massive, say, what we would call a short squeeze. No doubt a ton of shorts piled into this thing today. If any that had been holding this choose this moment to exit, you could see this thing skyrocket. But that doesn't mean it's going to make it or that it makes sense as a long-term investment. Under these current conditions, now in light of the evidence that have been made available to us. So I know I spent a great deal of time on that. I wanted to make sure I was concise and specific when it comes to understanding exactly what we're facing here. So just be careful. If you plan to play around with this stock, even in the short term, just be careful. At any moment, once they declare bankruptcy, it will get delisted and end up on the pink sheets. You can still trade it, but let's face it, if there's one thing we learned from the Luna collapse, when you see something collapse 90% in a day, that was the first time I've seen something, an asset, collapse 90% every day for a week. But even it had a massive rebound. And so people that were able to time that correctly and exit again actually did quite well. So take that for what it's worth. But as far, like I said, as far as a long-term investment, even if Core Scientific pulls through, which I hope they will, And they have the opportunity to do so. But in taking that opportunity, it will most likely leave the current holders of those common shares with no recourse. That's all for this one. Now let's get back to empire building.